Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son of
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to the Chaos. My name is Brad. That is Fat Man Zoom. What's up, my man?
What's up, brother? Let me shout out our starting five. We got Jeff Panika, Sean Ethier, Savvy Money Show, Hades Shakur, and Rudy Brown. Shout out.
Rudy
Honorable
Brown.
mention, Don Fron.
What's up, Don?
What's going on, man?
Not much. I went to 5-iron.
How'd you hit him?
I was doing all right.
Yeah?
Yeah, I'm trying to fix my stance. Like with my irons, I feel like my arms are way too far forward, so I was trying to straighten them out, and it was real awkward.
Yeah, it takes a minute. When you try to change things, it gets worse before it gets better.
Yeah.
Yeah, man. I was hitting him pretty good. I felt okay about it. I just did pitching wedge, though. I didn't really get too crazy.
Yeah.
But the winter work paid off.
Yes, it did. I can't wait to get out there and hit some more.
Yeah, it's a nice little reprieve from all the stuff that's going on in the market.
Yeah, which is down a lot today. People have been freaking out over inflation numbers.
Yeah. So, man, we've been talking about it a lot. It's almost like the never-ending conversation, just as far as what's going, how much further can this go down? A lot of stocks that have been beaten down. When will they come back? Don, the only reason I said that is because I knew if I didn't say your name, I would get some sort of heat for it.
Notice me.
Just be happy that there was an honorable mention there. But yeah, I mean, as far as that, we talked about the conversation with Kathy Wood yesterday, and we even talked a little bit about it in level 3. It's just there's a fine line between confirmation bias and conviction. And, the one thing I was talking about was when your stuff is public, there's a lot of people who will tell you the stuff they're doing that's right. Yeah. They're not sitting there saying, they'll say, yeah, I got in this. I made money on this. I'm great on this, whatever. They're going to throw those out there. Yeah. But they're not throwing out their losers. Right. Right? There's some people who will get 30, 40 positions. No bullshit. I'm not making this up, right? And they'll tell you the 5 good ones. And I'm not saying people aren't doing well or successful. Yeah. But you know this as well as I do. When you're putting yourself out there publicly, it is a different ball game, and it's really hard to silence the noise and stick to your convictions.
For sure. It gets easier over time. I don't care what people say anymore. Yeah. But for a while, when I just had all my laundry was out, the dirty and the clean. Yeah. And it sucks. It doesn't feel good. But I like what you said about conviction versus, confirmation bias, because my convictions have not changed. I still feel very bullish about the market overall. Yeah. And we're going to get into why in a little bit. So stick around for that, because I think I have some pretty juicy bits that make my case. And so I'm super excited about it, just to talk about how bullish I feel, even though, and this is the thing, people ask for pullbacks and then they get them and they're like, what the hell? Yeah. And they start to freak out. So it's this is what you wanted.
That's why you
bring it on.
That's why you got to make your determinations beforehand. Yeah. And say what I'm going to do, rather than, and I'm going to continue to use Tesla as an example, because this is the second time it's happened. It happened after the split, where nobody thought it was going to drop down again. Yeah. And they thought I was crazy for saying it. And then it just happened again recently, about a few weeks ago, where nobody thought it was going to drop down again. And you just keep talking. You people keep talking about the bull case. It's rather than say that, you should say, well, what if it does get here? Right? What if it does get to 550? What if it does get to 500? Nothing should be off the table. And so if you're so confident in a stock that you just won't consider the downside, then if it does go down, why is your conviction not higher?
Correct.
Right?
Yeah.
Unless something material has changed about the company. And Tesla, you could make some arguments on a bear case, but largely it's a bull case scenario, and everything else is going down. So you should be chomping at the bit for Tesla and saying, this is undervalued. Where am I getting in? Because you just don't want to catch a falling knife, but there's an opportunity. You got to think about it before the red day happens, because in the moment it's like, it's scary to pull the trigger on that.
Yeah, for sure. And you have to go into it with the plan. And that's why I sold out of Tesla. Everybody lost their damn mind when I sold Tesla at 700, and I kind of look like a genius now, even though it didn't go my way. I could have taken the loss when I took it and ripped the Band-Aid off, or just continued to endure the pain at this point. So I took that, put it back into some of the higher conviction stocks I had with the cyclicals, the materials plays, and it's working out rather well. I feel really good about it.
When will you get back into Tesla?
If Tesla hits 500, it might look awfully juicy to me.
Yeah. Okay.
I mean, that we're talking like September, October numbers at that point.
Yeah. It would be wild.
Yeah.
It would be really wild.
Yeah.
So
50% retracement, I think, is going to be around 490 something, if I'm not mistaken.
Okay.
So if it holds a 50% retracement, that would be a pretty good signal for buying.
Got it. So as far as the overall market and what we're having a conversation about, guys, and we got a decent amount of people in already, which is pretty cool.
Yeah, I got 145 of you guys hanging out. Appreciate you. We're just kind of shooting the shit a little bit before we really get into it. What do you say we start that up?
Yeah, man. Make sure you guys hit the like button. Your first time here, welcome to Own the Chaos. The stock market is crazy and chaotic, Brad, and we've made it our mission to own it. So welcome, guys. We're talking about the overall market, and as far as today's topic, we're talking about inflation, and Tim G had asked a question about it. So we'll talk about inflation. We'll talk about the market crashing. Guys, if you see the bulls and the bears in the chat, that is our Chaos Crew. You can click the join button next to subscribe, and you can join the Chaos Crew and get all the goodies, watch lists, private live streams, Discord for $4.99 a month. Consumer price index rose over 4%. Inflation's up. I guess the first question is it a surprise to you? And the second question is, so what are you doing about it?
So yeah, just to set the stage, like you said, they're up 4.2% over the year, 0.9% over the last month, which hasn't happened since 1981.
That's crazy.
Back then, the inflation was crazy. That was when, neither one of us are alive, but our parents I'm sure somebody.
What year?
Well, 81.
Oh, okay. Yeah.
But before that was the 70s, and that's when like the gas crisis and all that was happening. You were going to the gas station based off of your tag number and all that shit. So there was a lot of stuff going on then. People are started to worry about that now. And I don't think there's a whole lot to worry about, especially if we go back and look at the jobs numbers that we talked about on Stockwatch Sunday. I think this is more or less of a knee-jerk reaction. And for me, you look at these numbers that came in from inflation, why hasn't the 10-year yield reacted all that much? It's only up seven basis points today.
Yeah.
It's still not nearly as high as it was earlier in the year in March. It was up around 1.75, and we talked about We talked about the 10-year potentially going to 2%. So we're still well below that. Yeah. And you would think if we saw inflation numbers like that, that the 10-year would just skyrocket. And it's gone up, but it's barely moved. It's up about 4% today. So I just don't think that. I mean, it seems to me that somebody knows something that we don't. If the 10-year is reacting that way. And so I think that today is just more or less of a reaction than anything else. I'm not saying tomorrow is just going to be immediately green, but I think that this is still very much an overreaction.
So you're not worried about it?
I'm not worried about it. And one of the biggest reasons why I'm not worried about it is because we look at some of the pockets of inflation that we're seeing. Yeah. We're looking at goods, services, and food. We're not looking at, and we're not looking at some of the really crazy inflationary issues that we saw back in like the 70s and stuff like that. So this to me still looks like it's just transitory at this point, and nothing has kind of like really led me to believe that it's going to be anything beyond that.
Okay.
I'm going to trust the Fed on this.
So I think the question that people I know the question that people are asking, and I think the specific question to you is the question people are asking. They keep naming these specific stocks.
Yeah.
Is this a buy? Is Clover a buy? Is Spirit Airlines a buy? Is Rocket a buy? And there's a subset of groupings, and Spirit Aerosystems would probably take it out, but all the other ones would be like ones that benefited off of COVID. Or maybe tech leaning, tech exposure. I'll just say this. I don't know if the question is it a buy? It's when is it a buy?
Yeah.
Or when to buy. Because yes, they are buys.
Yeah.
But they're not buys until we see some confirmation and we see a clear reversal, right?
Right. I mean, we said this yesterday. I said that tech has in the Qs specifically, the NASDAQ has room to come down another 7%.
Yeah.
And so that means that I still think that tech stocks have more room to the downside.
Yeah.
And we've talked about why we like the industrials, which Spirit Aerosystems falls into that category. Yeah. The materials plays, all the ones that benefit from any kind of inflation, transitory or not, these are going to be the ones that get into. And any kind of like inflation scare is the worst possible thing that could happen to tech stocks.
Yeah.
So we talk about not wanting to be completely out of tech, but you also want to make sure you have exposure in these areas.
Yeah, and Spirit Aerosystems is a different story because it's struggling due to the Boeing issues. And so we still feel confident in the long term, but it may be a minute before that gets moving. But as far as airlines as a whole, we're pretty confident on airlines.
Yep.
And the thing to remember in this situation, if you say that, if you said yesterday that the Qs have 7% further down to go and it's down like almost over 2.5% today.
Yeah.
So you still got 5%, right?
Yep.
Remembering that there's a beta there. And so the stocks you're looking at are likely going to be more volatile than that 2.5% down.
Yeah.
So that's why you're seeing stocks, the ones you like, down 5%, 8%, 10%. And so if it's true, or not that it isn't true, if it comes to fruition that 5% is further down, then that could mean 10, 15% further down for these stocks you like.
Just exacerbates your individual stocks that you're in. So, I mean, that's what I'm saying. Like 200-day moving average is still very much on the table for the Qs and in tech, which is tech heavy. So that's why I keep talking about NASDAQ specifically. But, the pullback on things like energy and materials, some of them are even green today. And so I'm in Marathon Oil today. It's just barely green, but it's still green nonetheless.
Yeah.
You look at the rest of the market, you're like, oh, it doesn't feel so bad. So one other thing that I wanted to bring up to kind of make my case here, I just wanted to bring this graphic. So FundStrat, Tom Lee's FundStrat. Pull it up on Webull. Right now, we look at the VIX. It's sitting up 30%. And so anytime we see a spike like this, it usually ends up representing a bullish pattern potentially, specifically for the S&P 500. So over the last 20 times that this has happened since 1990, we've seen a 10% bull move. And I'm talking in bull markets. We've seen, and we are in a bull market, whether you want to admit that or not. We're in a bull market, people. We've seen a 10% increase in the S&P 500 in the following 6 months. So this is very interesting. And you can actually look at the last time this spiked. This wasn't a 40% move, but we looked at the last time that this spiked and just kind of look at the Qs, what happened afterwards. So that's the VIX. There's so paint yourself a mental picture. So that happened in January of this year, January 29th. So this is January 29th on the Qs. Pretty bad day, right? When the VIX was up. The following days, huge run-ups here.
Yeah.
And so I think that there's definitely a case that can be made here. Again, if we go back and look at this.
Yeah. So with that said, two things I want to point out. One, Dimitri says, if everything is cyclical, then should we buy tech now and wait for it to come back, not follow the tide? What do you think? And I mentioned this where it's like reopening conversations have been going on for a very long time. And when we initially brought it to the table, and analysts were saying this too, nobody wanted to do it.
Yeah.
Nobody wanted to get out of tech and get in, and it didn't happen right away. But it initially made a move towards the end of 2020, and then it just has now been on a tear.
Right.
It can go up more. So I can understand the feeling of like not wanting to chase. I think you still have to get the exposure because I think there's still opportunities.
Right.
But your point is well taken, Dimitri, in the sense of you shouldn't abandon tech, and that's what we're saying.
Right.
Now, if you're in it or the stuff I'm in, I'm not trying to get out of. I feel good about it. I feel like it's good value, but I'm not ready to add to it yet. Mm-hmm. And if I'm not in something, I'm not ready to get in. We've got to wait to see that the trend has changed. And so, yes, you should absolutely be ready to jump on tech and to not follow the tide, but wait for confirmation because so what if you miss a couple percentage points? When it happens, you'll have huge upside. And we're talking about there's stocks that have 30, 40, 50+% upside. And so just know what you want, know what the levels you want to get in at, but then make sure that you're considering the confirmation. The one thing that I wanted to just point out was, so if would it be fair for someone to just look at the NASDAQ and just wait for the NASDAQ to reverse trend to then consider what you want to get into overall tech rather than looking at an individual specific tech stock?
Yeah, I will answer that in a second.
Yeah.
I apologize.
What?
Because the audio was not connected to that graphic that I slipped over there, so it was complete silence.
Yeah.
You'll never know exactly what we said. They were the best. It was the best nuggets of information you'll ever hear. And now
I saw it. They said you were back, so I didn't want to get to use your flow.
So no, so basically just that chart represented what happened over the last 20 years. Every time the VIX spiked like that, and there was a 10% move essentially in the S&P over the next 6 months. That's all you really need to know. But no, I think that it's reasonable to look at the cues and kind of observe. And that's what I was talking about, that 200-day moving average yesterday.
Yeah.
And just kind of observe that. And just use that as kind of a guide. If you're looking at individual stocks, your higher conviction ones, those are definitely ones to turn to. I don't think that it's appropriate to probably look at some of the ones that are super high multiples. But I looked at Peloton and thought that Peloton was actually a good buy today.
Yeah.
At least as a starter. And so I think that we're starting to get close. I don't know if we're necessarily there yet for a bounce, but I think we're starting to get close to that. But there is still a little bit more room to the downside. And
I want to remind people what your position does today, tomorrow, the next week or 2 weeks isn't the deciding factor on whether you made a successful trade or not. If you're day trading, sure. But for what we're talking about, like as far as swing trading, the end of the year, when you look at everything and you look at the picture, is really when you should make the determination of, evaluate it. You could do it at a little bit greater frequency, but evaluate it. You gotta take a macro approach when you're determining how you're performing and how your portfolio is performing. I think people are looking too micro, and that's causing like general freakouts.
Dude, 100%. I can't tell you how many people that tell me have told me over the last several weeks that their account keeps crashing, and so that automatically means the stock market's crashing, and it's like, no, you're just in the wrong shit.
Yeah.
I don't know how many times we got to tell you, you're in the wrong shit. And it's not going to come back tomorrow or the next week. It's going to take some time, and you're going to have to endure through some pain. Now, I still have tech stocks. I'm getting wrecked on Penn and getting wrecked on Airbnb and moved my way out of the rest of them.
Yeah.
And realized what was happening. And I didn't move as soon as I should have, but I still made the move. And I think that was the important lesson that I think some people just kind of overlooked. Was that, I didn't get the absolute bottom of some of these industrial plays, but they are still moving and still have plenty of room to run.
Yeah. Well, in that note, let's give them some takeaways. So, guys, the market's red. It looks like all the stuff we're in is down, right? If you feel that way, the stuff's down. We want to give you guys 3 stocks that should benefit or bode well given the inflationary concerns, given the consumer price index rising, that should be a good diversification play. So Brad, what are 3 stocks that you would be interested in for this situation?
Yeah, so OIH actually is pulling back a little bit today. This is one of the very few stocks that I mentioned earlier in the show that I'm in, and it's green today when everything else is red.
Yeah.
Energy, oil stocks, the industrials, these are the ones you want to go to. OIH is the VanEck ETF for the oil services, and we already talked about this being a stock to watch for Stock Watch Sunday, but I thought it was worth repeating because of the issues that we're seeing with the pipeline. The supply issue is only going to continue to inflate stuff like this, and we talked about how crude oil is continuing to rise, and the OIH ETF is still lagging behind considerably. And if we compare it to what we saw in years past, where oil was versus OIH still has plenty of room to run, maybe even to around $300+ per share. So I like this one a lot. The other one is going to be Cleveland Cliffs, which it was kind of back and forth. It's a little choppy today. I don't know if it's green right now, but it was green on the day. Yeah, just turned red. So it's down around 6%. This, in my opinion, is also another good one to grab. If we're talking about inflation, this is going to be one that's going to continue to go up. I think this has the ability to, or the potential to hit $30 a share. When we look at the price of steel and iron ore, the raw materials, they're going through the roof. Steel is up double what it was just a year ago. So I think that this is still very much in play and worth grabbing the dip on. This looks juicy as hell. I might even grab this one as well. Another one is EAF, Graph Tech. This is one that I'm also in. This is another one that I think is going to be a good one to kind of grab the dip on. It's just barely red. When you look at the rest of the market, it's not doing half bad. I think that this is probably another one to grab the dip on. This hasn't liked to live under $13. And look at this trend, bro. Like this trend over the last 6-8 months, it's been beautiful.
Yeah.
It's been holding this trend line wonderfully. It's been hanging out above that 50-day moving average. It's hella bullish right now. So I still like this one. This is definitely worth grabbing the dip on too. And that's just 3 of them that I kind of, put out there. But all of these in this space is doing really, really well.
Yeah, guys. And these 3 stocks have been showing up on our watch list. We give out a free watch list every day before the market opens. 5 stocks that we're looking at, and we try to mix in good diversification plays. So if you guys are interested in the watch list, go to ownthechaos.com and click on get a free watch list, and you too could get access to those stocks.
Yeah.
All right. As far as after hours, so we're coming up on the bell.
Yeah.
We can hang out a little bit. For the hell of it, I think we need to look at Tattooed Chef.
Yes.
Poshmark was one that some of our crew is in. So
yeah.
We're not in Poshmark, but keep an eye on that. Earlier it was running. I'm not sure what it's doing now. But I think that too. And I'm interested in Sonos.
I'm interested in Jack in the Box.
You're interested in Jack in the Box?
Yes.
Hospitality play?
Yeah. Wendy's popped off on some earnings, and I thought maybe looking at Jack in the Box, I could have something very similar happen to them as well. Could be another really good reopen play.
So for you guys that are new here, the bell will ring. Brad will pull up the charts, and we'll keep an eye on whatever you guys want to look at as it's moving. We'll watch the charts, see the reactions to the specific stocks. But the ones we just called out, we'll definitely be looking at. And if there's other ones moving, you guys can call them out in the chat, and we can pull them up as they move. But no BSing. I know what you guys are going to do. You're going to act like something's moving. You act like earnings are out.
Yeah.
We're too grown for that. Did Disney report?
Disney's tomorrow.
Is it tomorrow?
Yeah. Airbnb and Disney are 2 big ones tomorrow.
Ooh. Tomorrow's going to be a good one.
I hope so. I know Disney should do really well. If they miss on anything, I would be very surprised.
Well, speaking of streaming, Fubo crushed it.
Oh, my God. And their outlook is even better than it was pre-pandemic, which is unbelievable.
That's just a humble brag. I just wanted to bring up the fact that I freaking called it. Yeah. Stock Watch Sunday, baby. What do you guys think about the Cheesecake Factory?
Ooh, I haven't looked at Cheesecake Factory in a minute. But in the space, in hospitality, if it has any kind of reaction like Bloomin' Brands did last week, man, Cheesecake Factory could do well. When is their earnings? Are they today?
I didn't see them on the list. I do not know when. But
just looking at the
Dimitri, when are the earnings?
Looks like they came out. 10Q was the 3rd? Or, 10Q came out the 3rd. So it looks like they already had their earnings. Yeah. So I think this is a buy. You see this pulling back? This is a pretty good correction. If this holds above 57, yeah, I like this. Looks like their earnings were pretty awesome.
So we'll check that out. We'll check out these stocks, but I want your opinion on this because I think we may disagree on this.
Okay. What you got?
So Vinay has his limit sell for Airbnb at $300. Can you pull up the Airbnb chart real quick?
Sure. At $300?
Yeah.
Holy shit. Okay.
Which
that's double, more than double from where it's at.
Which is essentially a take profit.
Yeah.
Right?
That's yeah. It's certainly a take profit. This held up wonderfully yesterday.
Yeah.
I just want to say.
We
talked about that level.
The reason why I'm bringing this up is because I have an answer, or I have a comment on this. He's not asking a question, but I have a comment on this.
Okay.
And I don't know if you would agree. You may disagree. I would never put a limit sell in.
No.
I would put a stop market in.
Yeah.
Right? Or a trailing stop in.
Yep.
But my question to you, Vinay, is why would you put a limit sell in? Because if you get a massive move, like I understand if something spikes up and you want to sell out, like cool, establish that number. But what if it, especially a psychological resistance like $300, what if it blows past $300? Even if it goes to 320, you're making like another 8%.
Yeah.
Or 7%.
Yeah, I don't know if I understand. I mean, I don't understand what the
I don't care about the
reason be
number.
for would that strategy. Like, why would I put a limit order in at 160? You know, like, unless it was
the bottom, like.
Right, unless I was putting like a stop in or like a trailing stop. I think a trailing stop would be the best way to go about doing it. That way you can scale out, just like we talk about. Scaling out, scaling in is probably the best course of action. But I don't know if just putting a random order in at 300 would really make any sense.
I don't know that there's any situation where I would put a limit sell order in, ever.
Yeah, I don't know if I would do that either.
I appreciate you saying that, and I'm not trying to call you out. I don't care about the number, $300. That's
He's
cool.
in at 138, by the way. Vinay, bro.
That's awesome.
What a grab. 138.
So, anyways, just interested as your thought process, because the stop, either a stop whenever, because you're in it all the time, Vinay. You're in the market all the time, so you're going to know when it gets around there. Either putting the stop in or just do a trailing stop.
Right.
Anyways. Right. All right, so we got a couple people talking about Sonos. Wix was pre-market, I believe.
Sonos is down 10% today.
Is it?
Holy shit. Yeah.
They also, didn't they crush last earnings?
Yes, they absolutely annihilated last earnings.
Can we pull up that chart?
Yeah.
Oh, wow.
Yeah, look at that. Yeah, they crushed earnings last time around. I don't remember what number it came in at, but they blew it away. They have some really good partnerships as well. I think Audi's one that they have a partnership with. Some of their Audi vehicles, they're putting Sonos speakers in, or systems in. So yeah, I think it's tough. I think Sonos is one to hold on to. I don't know if it's classified as a tech company. I guess you kind of classify it as a tech company, but they're also, along the lines of like the discretionary retail spending type of stock too. So I guess it's probably more so lumped into tech, but this looks like it would be a pretty good buy if it holds above maybe this $30 range. I don't know how they don't beat earnings here. Obviously, it depends on how the market reacts here, but man, with it being down 10%, what's the risk reward if you just bought it here? I think it's pretty good.
I think it is.
And do it with money, obviously, that you can afford to lose. But I think the risk reward here would be real good if you just decide to throw some cash at it before earnings.
Yeah. Would you be more confident in throwing cash at Sonos or at Airbnb?
Shit. I mean, I think it would depend because it's hard for me because I think Airbnb is a good longer term hold, and I'm just hanging on to it. But I mean, with Sonos being down 10% today, if you're just looking for a nice little flip, I'd be buying this all day.
Yeah.
And right after hours, it's up 3%.
All right, let's get to work.
The market has officially closed, and it is shooting up. Just say the word and speak it into an existence.
Let's get the numbers first.
But damn.
That might be all the chaos.
Literally, we're just talking about it. Boner candle
it's up 6%?
already. It's up 6% after hours. It's now up 7.5% after hours. Jesus.
Haiti, we'll talk about Clover earnings on Sunday. We'll have that conversation.
All right, what we got here? All right. Cheesecake Factory. Sorry, I was looking at the earnings there.
I mean, as a company, Cheesecake Factory is a very good company. They treat their people right. They have a good business model. We had CMG on the watch this morning, Chipotle. Yeah. I'd prefer a Chipotle just because of the overhead of a cheesecake, but it's a good if that's the one you believe in, I think it's a good hospitality option.
Yeah, I think holding just about anything in hospitality right now is probably good, at least if it's been beaten down. Mm-hmm. I'm not in Sonos, Don, but man, I wish I would have just grabbed it right before the close at this point. Looks pretty darn good.
I hate when something moves before we get the earnings, though. I'll be honest. It scares me.
They've released usually this is probably one of those companies where they released a report right at 4:00.
Yeah.
That's hilarious. Don said I'd be bullish on Cheesecake Factory if their menu wasn't a book and had pictures in it. Their menu is crazy.
Yeah, they got like 1 million cheesecakes.
They wouldn't be Cheesecake Factory though without the menu like that.
Do they still give all their GMs like a BMW? I think their GMs get a company car, and I think it's like like the perks for them as if you're management are like pretty ridiculous.
That's crazy.
Really solid salary, good benefits, and you get like a car.
Jesus.
At least that used to be like 15 years ago when I was in the industry.
Yeah,
but
that's wild.
Yeah, isn't that pretty cool?
Yeah. Jack in the Box, no after hours activity. We'll see what happens there. What were some of the other ones? We had Sonos.
Yeah, Poshmark.
Oh, yeah, Poshmark.
Wish. Tattooed Chef.
I'm sorry, what? So what was that?
Yeah, you get free food.
Wish. Oh, no, that's not. What is the ticker for Wish? Is that it? That's not it, right?
I thought it was WISH.
Okay. Tattooed Chef. I never even gave Wish the time of day, so I wouldn't know. Tattooed Chef.
Poshmark numbers are in.
Tattooed Chef is barely green after hours right now. Yeah, Poshmark. Lots of positive sentiment on Posh today.
I don't know.
But right now it is down 4.5%. Poshmark, I got some numbers here. Poshmark sees quarter 2 sales 79 million to 81 million versus 79.3, so it kind of came in line there. Adjusted earnings per share, a loss of 33 cents, beats their estimates of a loss of 42 cents. So it looks like their revenue came in just kind of in line, but I think the street was expecting more out of this.
Mm-hmm.
Tattooed Chef still just barely green after hours. Doesn't look like we got any numbers out of them just yet. Still waiting on Sonos, but Sonos is up 6.5% after hours. Looking pretty decent.
Yeah, that's awesome.
Ooh, Posh is coming down 9.5%. Yikes. Must have been something else in those earnings. It might not have been good outlook or something.
Well, we talked about this morning when it was going off, like being careful about it.
Yeah.
It was.
Damn. That's crazy. Wish is down 2% after hours. Sonos still rolling, up 7.5.
Damn.
I got him coming in. Arfin's bringing him in.
I mean, Sonos is just so much better than anybody else in that space.
Look at this. It's up 9.25 now. Going back to the Sonos chart. Damn it! Why didn't I take my own advice?
Because it would have went down if you did.
It would have went down. Yes, that's absolutely right.
We don't play that game.
That's absolutely right. You still kick yourself. Sonos, the earnings per share was 31 cents. I don't know what the expectation was. It's still rolling though. Looking good. Looking good. Okay. Tattooed Chef, still nothing from them. They're down 1.5%. Oh, they just went green again. A little bit choppy here on Tattooed Chef. Looks like it's probably some low volume BS going on. Yeah, there's like no volume on this. Just continue to wait out.
I think the numbers are in.
Sonos is now over 10.5% up in after hours trading. Rolling. Absolutely rolling. Damn. That's awesome.
It looks like Tattooed Chef year-over-year revenue was up 59%, so 52 million versus 33 million last year.
What was the expectation?
That's what I'm trying to figure out.
It's a weird reaction to it after hours right now.
It should come in a second.
Sonos is still looking awesome. Looking at some of the other stuff after hours, and it looks as if some of the cyclicals are turning green. Nothing too crazy, but we're starting to see a little bit of a turnaround here after hours trading for some of the industrial cyclicals, that sort of thing. All right.
Brandon said, I think I might have to sell out and quit the market for good. That sounds like, if you quit the market for good, I just
you
get
can't.
in.
Yeah, I mean that's like taking an even bigger loss.
Well, I mean, if you quit the market for good, like you should just. If I decided I wanted to quit the market, I would just put it in like SPY or something, or a mutual fund. But that feels like when people say I'm going to quit the market, they sell out, and then when the market starts coming back and all their friends are in it, they get the FOMO, and then they decide to get back in the market, and you just miss that run up.
Literally, the worst thing you can do with inflation is just sit on cash.
Yeah.
That's literally, it doesn't matter. It's a position. It's a losing position.
Yeah, because if you don't sell, you haven't lost anything.
Yeah.
And I'm not saying you shouldn't sell things for sure if you have a strategy, but like,
Jesus. Go ahead.
Everything's like, I can't reiterate this enough. Everything's going down. I don't get concerned with everything's going down. I get concerned when everything's going up and mine is going down.
Or what I mean? Or sideways. That's real annoying.
Well, but like my point is, if everything's doing the same thing, that's indicative of the market, not the stocks.
Correct.
And so the market will come back.
Bro.
And so
these Sonos numbers, the earnings I said were 31 cents. Expectation was a loss of 22.
For Sonos?
Yeah.
That's awesome. That's great.
Yeah.
I love me some Sonos.
Yeah, wow. That's crazy.
Yeah, you sound emotional, Brandon. Not trying to call you out, but
letting it get to you.
Use these as learning opportunities. You know, like you're paying the market for education. If it's that bad where you're thinking about getting out, it sounds like you're getting hammered. Focus on your strategy and evaluating your strategy rather than beating yourself up about misplays or not.
I'm just going back to the Sonos chart here. This thing looks incredible. It's up almost 11% after hours. Wild. Absolutely wild.
I'm going to challenge you a little bit.
Me?
Yeah, because your reaction, I feel like, was very common reaction. Like, to the close, we always get kind of like, oh, we should get into this.
Yeah.
Kind of get like tomorrow we're going to itch on some things. But the reality is, like, even though it would have been great, you got to balance that with the times where you were like, I want to get in something. You don't, and it goes down.
Yeah, for sure.
My point is, that wouldn't have been a great look to just jump into something 2 minutes before close.
That would have made for great content.
I mean, it's great content, but like from a habit, like a habits perspective or like a strategy perspective, like typically jumping in things 2 minutes before close is like not a long-term sustainable.
To be fair, I did lead in with money you can afford to lose.
Yes, yeah, for sure.
So,
I feel like I just feel like a lot of people experience what you vocalize, which is like, oh shit, I should have got in. I wish I would have done it.
Yep.
It's actually good you didn't do it. It doesn't matter what the 11% was. It was good you didn't let emotions get to you. Just next time I should be looking at Sonos or whatever.
Yeah, for sure.
I think the one thing we don't do a great job of, or at least I say I don't do a great job of as well, is like,
could have bought Posh. It's down 11%.
I know. I mean, we had some people in it. I don't look at earnings enough beforehand. I would be down for taking calculated risk before, where we typically wait till after earnings and
just like some YOLO trades.
No, not YOLO, but like Sonos, like looking at it earlier in the week and being like, here's where I would want it at. And I'd feel comfortable taking a chance. Yes, YOLO, but not in the sense of like, look, this looks like a good setup, and this looks like it hasn't run up, it's already undervalued, it had a great earnings. Like, so, like, if we would have looked at Sonos, we probably would have arrived at like, okay, this is probably a buy.
Well, especially because when we were talking about it, I was looking at it and it was down 10% on the day.
Yes, but you can justify that with anything. My point is, this is just for me speaking. I don't do well 10 minutes beforehand because that's confirmation bias.
Correct.
You know what I mean?
Yeah.
And so if that conversation would have happened on Stockwatch Sunday, if it would have happened earlier, like we talk about this in our watch list. If it comes down to this level, this is a clear buy.
Yeah.
But now thinking about tomorrow, this is an insane run.
It's going to pull back. There's
going to be profit taking. Like crazy in open
for sure.
tomorrow.
Absolutely. If you're looking to liquidate some funds and you're in Sonos already, you're probably selling tomorrow or even this afternoon. Speaking of losing money, Tattooed Chef's down 5 1/3%. The downtrend continues, my friend.
Oh, that's rough.
That's real rough. Where's our buddy Stephen Justice? Isn't that who that is?
Yeah.
Giving you shit.
Yeah.
The downtrend continues on Tattooed Chef. This is a daily chart. Not looking good. Pattern continues, folks. Good old Tattooed Chef.
He's trying to say he told me on Twitter that it would go down.
Oh.
To say it's going to go down is not a very bold prediction. And
you got a 50-50 shot at that.
It's a 50-50 shot, and you're hedging your bet because if it goes up, you're like, I told you Tattooed Chef's awesome. The only option you had to say was that it was going to go down, bro.
That's so true.
So the whole thing is about the end of the year, not about some earnings that you said it would go down. You're never going to say it's going to go up.
I mean, yeah, you might as well play red or black at that point. Sonos is still rolling. Jesus. Pretty good. Oh, yeah, we didn't talk about Ethereum this week. Did we mention it yesterday?
Yeah, we talked about it.
Okay, because it's still rolling today.
I know.
Wild, man.
It was. Yeah, it was one of our. It was either yesterday or Monday. It was one of our topics.
Well, we weren't here Monday.
Oh yeah, it was yesterday.
I thought we talked about it Sunday, but
yeah.
Oh, not that one. Come on, Weeble.
I mean,
that thing is absolutely fire. Really good pullback today, though.
Yeah, I know. It was up to 4,200,
yeah.
4,300 at one point.
Yep. This morning it was. Get your life together. Here we go. So this is a 5-minute chart. Pretty big pull. 43.83 today was where it was sitting at. That's crazy. That's a move. Shoo. This is a really good opportunity to buy the F and dip, I think, if you're looking at Ethereum. Wanting to add? I like that.
What's Bitcoin doing?
Probably somewhere around the same thing. Doge took a big old shit. I know. I saw that. I don't know where it's at right now, but this morning it looked rough.
Is Bitcoin down 6%? Is that right?
Yep.
Damn.
Yeah, Ethereum's down 7%.
Oh, I didn't realize Ethereum was down that much too. I mean, I'm not saying damn in that way. I thought it was a big discrepancy. But
Mr. DeSoto says that I've been in Ethereum since 450.
That's awesome, man.
Shit. Hell yeah, bro.
While everybody was talking about Bitcoin, we were talking about Ethereum.
Yeah.
Not Bitcoin and Ethereum.
Just Ethereum.
We were saying Ethereum was the buy. Ain't that right, Brad?
We sure did. January. I don't know where I could pull that from.
It might have been before that. Was it January? Whenever it was at 700.
Oh, 700?
I started talking about it when I got into it, which was at 700. I got in at 700.
No shit. I didn't realize it was that long ago. Wow.
Yeah.
That's awesome.
Yeah. But now that the attention's on Ethereum, guys, this thing is going to keep rolling.
No, the hype's for real on Ethereum right now.
You got NFT exposure. You got DeFi. I mean, there's going to be more use cases for it.
Yep.
Gas fees for NFT. That's the bear case. We already talked about this. That's the bear case.
Yeah.
I'm sorry. You're not compelling me to be bearish on that, especially because they're addressing it.
Right.
It's Ethereum 2.0. So yeah.
What? This down 7%. It's going to be a good dip up, I think.
I don't know what Don's saying, but literally I have not changed one iota of my tune as far as crypto or Ethereum. Is that safe to say?
Yeah.
I literally have not said one different word throughout the whole process.
We've poo-pooed on every other cryptocurrency, including Bitcoin, other than Ethereum.
And we didn't have any problem with Bitcoin. We just said as a hedge. But as far as conviction to believe in it, I don't know. It's just it's at $4,000. You could get to 10. You could definitely get to 5. You could get to 10. You could get even more.
We made the case for 10 on Sackwatch Sunday.
But it's easy to say Ethereum now. It was not easy to say Ethereum
at 700
when Bitcoin was going to off the charts and people were talking about it like $1 million a token.
Yeah, right. Which they're still saying.
And I got no problems with it. I just think if you're using it as a store of value, that is a really huge risk.
Yes.
And all you are banking on is for group think, right? I think institutions makes it more of a calculated risk.
Yeah.
But you are literally using it as a store of value. There's no use case. So if the masses decide that they don't want that or they move to something else, it's just, to me, that risk reward just doesn't seem reasonable above and beyond a hedge.
Yeah.
10% or less, sure.
10% or less.
Go for it.
I mean, and that's exactly what, if anybody asked me about gold, I would tell them the same thing, 10% or less.
Yeah.
Because it's serving the same purpose in a sense. 210 of you guys hanging in here. We appreciate you allowing us to be a part of your afternoon. If you guys could hit that thumbs up, certainly would appreciate that to add to the support of the channel. But yeah, guys, thanks so much for hanging out. I think that's going to do it for me, my man.
Yeah, that sounds good, man.
So just to check back in, Sonos is now up 19% after hours.
Holy shit. That is beautiful.
Just one final check-in. Let's go back to the 5-minute chart here just to show you. That is a boner candle after boner candle, folks. Holy shit. That's crazy.
I'll get in at $35 tomorrow.
That's going to do it for us, guys. Again, if you guys want to be a part of our Chaos Crew, our channel membership, make sure you're hitting the join button next to subscribe. You get our daily watch lists. There's 5 stocks that we put out every morning in detail why we think that those are going to be potential movers throughout the day. So you guys want that. Access to our Discord group, access to our portfolios, all that stuff. It literally costs a cup of coffee, Starbucks cup of coffee, if we're honest, to be a part of the crew every month. So we certainly would appreciate the support if you guys wouldn't mind doing that. That's going to do it for me. Fat Man Zoom. Anything else?
See you in the live tomorrow, 3:30 Eastern time.
Peace out, guys. We'll see you again tomorrow.